your local lender at Rate, here with your weekly mortgage market update. And today is Wednesday, August 20th, 2025. And as always, there's a lot happening, so we're going to jump right in. The Federal Reserve's July meeting minutes were released today, and they expressed concern over inflation risk, particularly in light of new tariffs exceeding 30% on imports from the EU, Canada, and Mexico. But even though the Fed held rates steady at 4.25% to 4.5%, markets are pricing in a 90% probability of a rate cut in September. And the July Housing and Construction Permits report showed that overall permits fell by about 3% month over month, but it was really all because of an 8% decline in the multifamily component. Housing starts actually rose 5%. Completions, they increased 6%, and they were driven entirely by an 11% rise in single-family homes. So that's good news for inventory, which remains awfully tight. Sadly, though, current sales, future expectations, and buyer traffic are all in the negative territory. But I will say buyer traffic, it did tick up slightly, and that's likely due to increased sales incentives, which is the highest level since COVID. Builders are definitely feeling the squeeze from the higher rates, the lower demand, and the tariff pressures, and many are calling for a rate cut, just like all of us are. But theirs is to ease the financing costs. Last month's job report came with major downward revisions. May revised from 139,000 to 19,000, June revised from 147,000 to 14,000, and July's preliminary estimate was just 73,000, well below expectations. These revisions total a loss of 258,000 jobs from initial estimates, the largest two-month adjustment since 2020 outside the post-COVID shock. And while revisions are normal, guys, and it's part of the process, the magnitude of these changes drew attention and sparked controversy with critics, questioning whether the data was politically manipulated. So the BLS attributes changes to the delayed or revised reporting, while some analysts suggest these revisions could indicate weakening labor market or slowing economy. Lower job numbers could pull down gross domestic income, which is the GDI. And GDI affects GDP over time because fewer people working means less income and less spending. If GDP softens, that could push the Fed towards more rate cuts, which could be good news for mortgage rates, as we all know. And what about mortgage rates? Well, recently they started to drift lower thanks in part to a narrowing spread between the 10-year Treasury and mortgage rates. And according to the Mortgage Bankers Association, they are saying that purchase applications last week remained flat. Refinance applications dropped by 3%, but that followed a 23% jump the previous week, guys. So we're still at a higher overall level. And we are seeing these lower rates, obviously, driving activity. And we could see a stronger pickup if rates continue trending downward. So listen, everyone, we've got lots of key data and speeches coming up this week that could impact rates and the broader economy itself. So we've got the Jackson Hole Symposium, which kicked off today. On Friday, Jerome Powell is going to speak at 10 a.m. And this could be a market mover, especially if it signals future rate directions. And we're less than 30 days away from the next Fed meeting. So if we continue to see softer job data and lower GDP estimates, this could move the Fed closer to a rate cut, which would benefit buyers and refinances alike. So as always, stay tuned, stay informed, and if you have any questions about how this affects you, your buying or your refinancing plans, reach out to me anytime. And that's it for this week. Thanks for watching. I'm Maureen Lein, your local lender at Rate. And don't forget to please like, subscribe, and share this video with someone who needs to hear it. And I'll see you next week.